Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, we are facing sharply higher petrol prices as a result of the US backtracking on the international Iran deal. And Wall Street is up 1% following earnings upgrades for the oil patch. In California, they're about to require all new homes to install rooftop solar starting in 2020. Other American data out overnight was uneventful and uninspiring. We got data for their PPI and wholesale trade. Both sets were slightly lower than expected. And in Canada, the value of building permits issued rose in March more than expected, up at a rate of 3.1%. That follows a February fall. The strength is in multi-unit dwellings, especially in Quebec and Vancouver. And there was a bit of excitement in Japan overnight, with data out showing that wages are up 2.1% in the year to March. That is double the rise that was expected. And it is its highest jump in 15 years. Factory wages are up 3.3%. Inflation, Japan, that seems an unusual combination. There is even more excitement in Malaysia. Voters have rejected their current government, electing the opposition to power. In Australia, there are surprises in the detail of their federal budget. One is that regulator ASIC is getting a 7.5% funding cut from $346 million to $320 million. Staffing will fall by 30, but that's to 1,900. It does seem odd at the time their bank inquiry will impose on them a higher workload, but it is an enormous bureaucracy and one that isn't being shown in a positive light at present. And Standard & Poor's has affirmed Australia's AAA credit rating after that budget, but it has retained its negative outlook, basically on scepticism of the official assumptions about economic growth. In China, they're spending about $500 billion in their latest 5-year plan on new passenger rail projects, mostly high-speed rail. But reviews by Beijing of these signature projects aren't positive. Many are poorly planned and don't meet objectives, and moves are underway to scale them back sharply. And we're waiting on April new loan data in China. Analysts expect a flat report, but this data can often surprise, which is why it's important. Regulatory interventions are a key thing to watch for, as are the animal spirits of China's businesses. Bank debt is proportionally more important in their economy than just about anywhere else. We're also turning our attention to the RBNZ May monetary policy statement today. No one expects any rate changes, of course, but signals are important here, and this is the first one by Adrian Orr as Governor. We'll have a full coverage at 9 a.m. and the press conference live at 10 a.m. US Treasury 10-year yield is at 3.01% this morning. The Chinese 10-year is up 2 basis points to 3.72%, while the New Zealand equivalent is at 2.82%. That's up 4 basis points. And gold is at $1,312 an ounce in New York today. That's down $4. Oil prices are up sharply, as we've mentioned before, up more than $2 to over $71 US a barrel. And the Brent benchmark is at $77 a barrel. Along with our lower exchange rate, we're going to see a sharp rise in the pump prices soon. That would add at least 7 cents to New Zealand pump prices if crude stays at these high levels. The last time they were at this high was in 2014, and that was only briefly. Airfares will rise as well, no doubt, along with freight costs. The Kiwi dollar is slightly firmer this morning against the greenback at 69.9 US cents. On the cross rates, we're fairly stable, however, at 93.7 Aussie cents and 58.9 euro cents. That puts the TWI at 72.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.